Hey, what's up, everybody? It's Shant Banosian from Guaranteed Rate. I just wanted to give you guys another Tuesday update. A lot going on. I think the one thing I would say is that I'm just kind of blown away by how busy it is. I totally thought we were going to see a massive shutdown on weekends, and I was really just kind of, I guess, optimistic or positive about just how much activity there is on the weekends right now. I'm getting calls for pre-approvals. I'm getting offers accepted, seeing some multiple offer situations. Competition. But those are all healthy signs. It just shows that, what we've been talking about is that the market leading up to what just happened was very strong, and that, I think once we get past this crazy coronavirus global pandemic, it's going to be really strong. And I think we're going to see a super fast recovery. But, there's obviously a lot of changes going on. That's why we're trying to stay in front of you. I want to be consistent with the information coming out to you guys. So I want to talk about FHA right now. There's a lot of rumors, a ton of inaccurate information about being spread by lenders, realtors, and I get it. When times change, people freak out, but a lot of inaccurate information is going out there. It's normal during times of uncertainty that stuff like that happens. So what I'm hearing, and which is not true, is that FHA stopped lending. I'm hearing that FHA has changed their guidelines and FHA has raised their rates. Those are all inaccurate statements, okay? None of that is true. FHA doesn't control rates. It's a market, right? That trades. So the people that buy and sell control what happens to rates. It's an open market. FHA has not made any changes to their guidelines. In a minute, I'm going to share with you that FHA is actually the one statement they released in the last week to 10 days has been positive to help do more business. So I'll get into that. But what's really happening is, bottom line is a health crisis is impacting the housing market. The loss of jobs and loss of income has been staggering. Okay, so in the last 2 weeks alone, 2 weeks ago there was 3 million jobs lost. Unfortunately, last week 6 million people filed for unemployment. On top of that, there was people furloughed, small businesses. A lot of times you don't see what's going on with them because they don't. A lot of times will file for unemployment. They're just businesses making less money, so income's being reduced. And what lenders are afraid of is this is going to create added risk to default. If you don't make money or you don't have employment, generally speaking, a mortgage is your number one most expensive payment. So how are you going to be able to make your mortgage payments if this is lasts longer than everybody thinks, or maybe lasts as long as some people think? But bottom line is, with less people employed, less income coming in, it makes it difficult. So you'll have credit default, and that adds risk. Because that, what lenders are doing, or they're making business decisions like evaluating risk. They're changing their business practices, making business decisions for the sake of the stability and viability of the mortgage companies or the banks and the housing market in general. So, these are actually things that you want people to do. We want the housing market to recover and recover fast, and we want it to be healthy. It's really, really important, both short term and long term. So, frankly, we don't want more job loss. If there's more default and more, and mortgages don't perform and risk goes up, some companies will cease to exist, and we don't want that. So these are completely normal practices that companies are evaluating risk. I think the biggest takeaway from what happened 10 years ago when the financial crisis and housing crisis happened was that you can't wait a long time. And I think that's still fresh in the memories of a lot of people, so they're acting fast. I haven't really reacted like, oh my God, what's happening? Because to me, mortgage guidelines, in the business that I'm in, new lenders are coming in, lenders are going out, guidelines change, people have different niches. So this is, to me, it's kind of the same as it was before. It's just magnified in the sense that it's happening all at once, and it's happening to FHA, VA, jumbo, every type of mortgage product. Everybody's evaluating risk as as the economy changes due to coronavirus. So ultimately, we want smart people making smart decisions. Ultimately, yeah, in some cases, it does make it harder to lend money for certain loan products. So why is this impacting FHA? FHA are the riskiest type of loans. Whether you like it or not, they have the highest debt ratio standards, lowest down payment standards, lowest credit requirements, both in terms of credit score and also the overall credit risk. They don't, in a lot of the single family and condos, they don't even have any reserve requirements. The down payment doesn't even need to be vested, in the sense that it doesn't need to be from the borrower's own funds. It can be gift. So there's just sometimes a lot more risk and a lot less skin in the game. So when the economy changes, typically those are the loans that go bad first, unfortunately. Those are the loans that if a client doesn't have reserves, or if a client has a higher debt ratio and either their income's reduced or eliminated altogether, they're going to be at serious risk of defaulting. So that's what lenders are trying to prevent as best as they can. So what has FHA actually done? Okay, FHA has done two things. On their last mortgagee letter they released, or announcement, was they adhered to what, or they're in line with what Fannie and Freddie already did, and they're allowing desktop or exterior only inspections on purchases, which is great. They've eased up their appraisal guidelines, and they've also eased up their income verification guidelines, because a lot of people are working remotely, and so HR departments aren't in the office. So when we're calling and asking for verifications, nobody's there. So FHA is allowing for a recent pay stub or a bank statement of direct deposit. They're allowing that to substitute maybe the final verbal verification, employment, or written VOE, written verification that we do right before closing. But the FHA has not come out and changed their guidelines. They haven't changed their minimum FICO requirements. They haven't changed their debt ratio standards. The lenders are doing that. So every lender has different risks they're willing to take and decisions to make. So some lenders, and every lender is different. It's not across the board. Okay, some lenders have lowered their debt ratio standards. Most of them I've seen have lowered the debt ratio standards on lower FICO borrowers. So I've seen other people raise FICO score requirements. I've seen a lot of lenders, before you could do an FHA loan with a 580 credit score. That's going away for the most part. We've seen a lot of lenders set a floor at either 620, 660. Some people are getting really aggressive and going all the way up to 680. We're seeing people implement reserve requirements over and above FHA's guidelines and their own overlays, they're called in our business. So even though if FHA isn't requiring reserve, we see some lenders that are smart, add 2 months, 3 months of reserves. And I think those 2 to 3 months are important, because if this coronavirus is impacted for 2 to 3 months, the whole point of having reserves, which is generally reserves are considered 1 month of principal, interest, tax, insurance, and condo fee or PMI, the housing payment. We want to make sure our clients are going to be able to weather the storm and make their mortgage payments for the next 2 or 3 or 4 months. And when this is over and they go back to work, they can resume paying their mortgages on time. We've seen some lenders make no changes. That some people haven't as well. And we've even seen some people add overlays specifically to self-employed borrowers who don't count on regular paychecks from their employers, but also we all know that unfortunately with everything that's gone on, their business has been greatly impacted. A lot of small businesses are not generating any revenue right now because the whole, most of the country's shut down. So, just taking a look at those, because there's obviously some risks there now. Obviously the government in a lot of ways has stepped up big time to help with, the CARES Act and PPP. So, I think hopefully, that will help, help the small business owners out there. FHA FHA stepped up big time in 2008. In my opinion, in a lot of ways, FHA saved the housing market. That program was utilized, almost maybe overutilized. But that program's not going anywhere. Okay, I think it's going to be utilized again. Housing market thrived after 2008, and I think the same thing is going to happen again. But I can't, say it enough that it's not going anywhere. It's not shutting down. If you're hearing that, it's wrong. It's inaccurate, and it's a borderline unprofessional. So I think as professionals, what can we do, right? Do we really want to put our borrowers in the situation so they can just get a loan done, or we can get a loan done, or you as a real estate agent, you can earn a commission, and 2 months from now or 3 months from now, they call and they're either can't make their mortgage payments, or they're defaulting, or short sale, foreclosure, or worse. Like, I don't think that's worth it personally. So I think these guideline shifts from lenders across the country and banks are smart. I think in the big scheme of things, they're going to save people from getting into homes that they probably shouldn't have gotten into anyways, and protect them, which is great, which is all what we want. And if you're a real estate professional that cares about your clients, ultimately, when you think about it, that is the right thing to do. And although it's unfair in some ways that, somebody's been out there house hunting for 3 or 4 or 5 months or a year with these set of guidelines, that they had their hopes and dreams set on being able to buy a house right now. Well, the world's changed, right? Nobody planned on this pandemic, and it's impacted obviously people's health first and foremost, but unfortunately the economy as well. And so we have to keep that in mind that, although it might not be fair, what needs to be done right now considering current situation. So as realtors, first and foremost message, FHA has not disappeared. That's what you should know. Re-verify all your pre-approvals that have FHA on it. So every single pre-approval should say, whether it's a conventional loan, FHA loan, VA loan, whatever it is. If it's an FHA loan, pick up the phone or have the client pick up the phone, call the lender and say, hey, we've heard that a lot of FHA guidelines have changed. Can you verify that the pre-approval that you did for this client 3, 4, 5, 6 weeks ago, whatever it was, is still the same based on today? Hopefully you get a call back that says, yep, everything still works. Worst case scenario, you're going to get a call back that says, doesn't qualify anymore. But that's better than doing it after you have an offer accepted. It's fair to the buyer, it's fair to the seller, it's fair to all the agents involved. It's just better to have that information up front. Just because the lender they're working with can't do the loan doesn't mean that all lenders can't. So if they're not getting the answer they want, or they're limited because the lender is being extremely conservative with some of their guidelines they're putting in place, they can call somebody else. So that's the part that's kind of bugged me with some of the posts I've seen on social media. FHA changing the guidelines across the board, which is inaccurate. But have them call somebody else. Just FHA is not a one-size-fits-all program, lender to lender to lender. So if as a realtor, have them call somebody else. You might need more people in your Rolodex. There's a lot of great lenders out there. Instead of maybe referring them to 1 or 2 people or 3 or whatever it is, find some lenders that are really great at FHA, some loan officers that are great at FHA, that really know what they're doing, that understand their guidelines. Have them talk to more than one person. I would say as a realtor, you got to work right now. This has nothing to do with FHA, just has to do with all the guideline changes happening. You have to work with lenders right now and loan officers right now that make your team stronger, that make your clients, more empowered, more confident, more knowledgeable, that give good advice. The days of fill out my online app or fill out my application, here's your pre-approval and call me when you find a house, those are over. You need loan officers that really know their guidelines, that understand whether if we're talking FHA here, I understand the FHA handbook, actually knowing what that is, knowing the different investors that are out there and how they all treat FHA differently, the differences amongst FHA and a single family, a condo, a multifamily, all that kind of stuff. Overall, with the changes going on and the market changing, you should expect more from your lender, right? And again, it can't be a quick, fill out app, here's my information. They should be educating these borrowers. A lot of times, and FHA is not a first-time home buyer program, but it is utilized by clients that are first-time home buyers and also people that aren't as, for whatever reason, they need that FHA loan, so call it credit worthy. So they need a little bit more information, a little bit more hand-holding, a little bit more preparation, and loan officers that can't do that probably are not who you should be working with in times like this when things are getting a little bit more difficult. We need to eliminate pre-approvals that are done last minute, okay? In a tough environment, you can't just whip stuff up, right? It's preparation is key. If you're gonna run a marathon, you don't just show up to the marathon the day of the race and run it, right? Like you prepare for 6 months, a year, whatever it is. Now, I'm probably never gonna run a marathon, but if I was gonna, I'd probably, hire a coach, eat right, train, all that kind of stuff. Same thing with buying a house. It's a big deal, right? So you got to get prepared. 6 months out, a year out, it gives you time to get tons of good advice, and I'm going to talk more about that as what we should be doing as loan officers. But just get your clients serious about, hey, buying a house is a big deal. You have to do your job, and part of your role is me as an agent out, taking you out, showing you homes, negotiating on your behalf, providing you with data. Well, I need to make sure, Mr. Client, that you're doing your part and you're preparing yourself, knowing everything that you need to know, and making sure you're taking all the advice of a great lender that's going to put you in the best position to succeed, both in terms of getting the best financing terms and win your offer. Get them in touch with a lender ASAP, like have a person. Don't just tell them to go out and find a pre-approval on their loan and end up with an online lender or some rando that you've never met before. Have them get in touch with somebody that you trust that's going to give them good advice every single time. And then get them in touch with the rest of your team right away as well, the attorney, the inspector, whoever is a key valuable part of your team that should be helping these clients navigate what's a serious process. I think, it's really important that, we realize that buying a house is something that is a big deal, and rushing into it should be eliminated, especially now. I know I've said it a bunch of times. I'm really trying to make a point, but we need to prepare them. And I think as realtors, we need to be coaches and advisors now more than ever. As lenders, same thing. We need to be professional. As a loan officer, I'm not just giving up pieces of paper, reviewing quick data, and then sending out, call me when you find a house. It's, know what your clients expect and know what they deserve, and give it to them every single time. Know your guidelines. Know FHA. Know FHA versus non-FHA. Every single time a client comes to me and asks me if they want an FHA loan, I don't just give them what they're looking for. I also evaluate conventional options, state bond program options. What can I do to get them other things? Generally, I go to FHA if it's the only option that they can get. For me, for a long time, because there's PMI involved and it's permanent and there's upfront PMI. To me, I've always treated it as a loan option of last resort, a great option. But I do think that there's better options out there if you can prepare a client and get them financially prepared and qualified for something better. I stress the whole know your options and know your guides. There's an FHA handbook. I got it around here somewhere. It's always close by me, but with everything going on right now, I'm not as I don't have everything. It's probably staring at it, but I grew up in this business utilizing that. Every time somebody had asked me a question, I dive into it. Now a lot of this stuff's online, but it's easy to find the information. It's actually spelled out there. The guidelines aren't a myth. It's not hard to access. So it's really just understanding everything there is to know. This is the time in which we need to really prepare our clients. How we can prepare our clients is analyze their credit, analyze their income, analyze their assets, have an understanding of what they want to buy, how much they want to spend. Really, when a client leaves me, they're doing they're really clear on three things. One, maximizing their credit. So I go through line item by line item by line item and figure out things that we can do to help improve their credit scores, because the better your credit scores are, the more products you qualify for and better rates you get, because that's how the banks evaluate risk. We determine your budget both on a monthly basis, because buying a house, you're going to have that obligation for possibly 30 years. And we also evaluate your cash expenses and what your down payment budget's going to be. So that's also something we really dive into. So I'm not just giving you numbers. I'm asking you budgeting questions about monthly payments, down payment, and closing costs. So it's really important that we consider that right now. Credit is probably the biggest reason in a lot of cases. Credit and income is the reason that a lot of people go FHA. We try to do things that we can to help improve a credit score. So one of the things that I've done is that in some cases are more, I looked at tens of thousands of credit reports over my career, and a lot of times, if I can't help somebody, I have a team of experts that are credit repair specialists. That's like bringing in the big guns, right? They will come in and work with somebody for 6 months or a year and get them prepared. But I don't just tell a client like, hey, your credit doesn't work right now. Call me in 6 months or a year and we'll look at it again. I give them my opinion of what they need to do, and I know I've learned now with my experience that sometimes it's bigger than me, and then I need to bring in somebody that's their full-time job, is just helping clients improve credit. And I've had huge improvements in a year or 6 months. Clients come back to me with their credit scores improved by 100 points or 200 points, and the issues of the past put behind them with the grade of a really great credit repair expert. I think it's also as important as a loan officer to educate your referral partners on these changes that are going on. This is why I'm doing this call, is trying to help my agents that I work with, that I care about and that trust me and respect me and understand that I'm here to provide as a resource for you guys what's going on with the FHA. So part of our process over the course of the next couple of weeks, as these changes come into gear, is just going to be releasing all this information, letting you guys know what's changing, how it's changing, and what you can do to take advantage of the current market and help you sell more homes and be a better resource for your clients. You also have to learn as a lender when it's okay to say no, right? So that's probably one of the biggest things I've learned as a professional, as I've matured as a person, is just sometimes it's just, you're going to have to give news that people don't want to hear, and that's okay. They respect you for it, and they actually take action for it. The maybes and the ums and the ahs and well, I don't know, I think so, that never ends well. So I think really just kind of being able to say to somebody, unfortunately, you don't qualify right now, but here's your game plan, and here's the steps that you need to take, and here's the steps that I'm going to take. We're in this as a team together, and really being able to educate somebody the steps they need to take in terms of credit improvement, income stability or consistency, more assets, whether it's more money as for a down payment, understanding where the sources can come from and what they need to have left over, and then maybe changing their budget. Just because somebody wants a $500,000 house doesn't mean they have to buy a $500,000 house. Like, they might be okay with a $300,000 house if you understand what that means to them and what the reality of that is for them. And then lastly, as a loan officer, if your company is not going to support your business, go somewhere else, right? Like, the reality is that if your company decides that FHA is not important to them anymore, and that's a big part of your business, you have two choices at that point. You can change your entire business model and start doing loans as conventional loans or jumbo loans or whatever it is, or you can go find a lender that is totally okay and comfortable and confident with FHA and where it's going, and move your business elsewhere, just because that's what you may have to do. This is a time as loan officers, we have to be better than ever. We have to be more professional. We have to be more prepared, more knowledgeable. I think as a lender, that's kind of the focus I have with my team. I think that, I come into work grateful every single day because we are busy, and that, we're doing purchases, we're doing refis, and we're having really positive conversations with our clients. Some tough conversations as well, but I'm expecting more of myself and more of my staff, and just to really be more knowledgeable, more experienced, more prepared, and more and improve our communication, slow it down, and just be there for our clients and our referral partners. As a client, lastly, my realtor partners or attorneys, whoever's on here, you can utilize this with your clients as well. Buying a house is a hugely exciting thing. It's kind of like a milestone that we have as people that, graduate from college or high school or college, get married and buying a house, and that's one of them. But it's not something that you should rush into. So if you rush into it, you could definitely put yourself in a bad position, right? It's an emotional thing, but you got to kind of take the emotions out of it right now because, things have changed in the last couple of weeks. So as a buyer, the biggest thing, and as a buyer and a borrower, right, you should make yourself the most attractive buyer possible. And how you can do that, what attracts lenders, you want to have lenders fighting over you in terms of, hey, we want to lend you money because your credit's excellent, right? Your income to expense ratio is low, right? You've got down payment money, you've got reserves. You can do that with preparation, right? Like, it's just about like how bad you want it and how much time you have and how consistent you are with it and how disciplined you are. So I think that's super, super important is, think about that. How can I make myself a more attractive buyer? If you don't know the answer to that question, find yourself a reputable and experienced loan officer. There's a lot of really good ones out there. There's a lot of them been doing this for a long time. There's a lot of them that aren't interested in just one paycheck and one commission check, that are playing the long game, that want to give you great advice and will spend the time with you now, that will earn your trust and respect so that you do business with them forever. I think it's important to start early and really understand your financial position and getting prepared. And again, I know I said this, and a lot of this stuff I'm saying is repetitive, but I'm really good at trying to make a point here. Set a budget, know your monthly payment, sort out where your down payment's coming from. Are you saving it? Are you borrowing from 401k? Are you getting a gift from family? How much are you gonna have to save every month in order to get to your goal? Are you liquidating an investment account? There's multiple different options out there, but just know what the number is that you need, know what you need for closing costs, know what you need to have left over, okay? And those can be guidelines set by the lender. They can be guidelines set by you personally. I can help you with that, or a great loan officer can help you with that. Improve your credit. So, from what I'm seeing for FHA, that's largely unchanged, is anybody with a FICO score over 680 in the FHA world, life is no different than it was 2 or 3 weeks ago. It's people with credit scores below 680 that are having the toughest time in terms of some of the guidelines that lenders have put in place. And then just really understand your options. So I know the topic of this was FHA, but my point is that there's a ton of low down payment options out there, and great options out there for first-time home buyers, like for single families, condos, multis. In Massachusetts, we have an amazing program, Mass Housing. Fannie Mae and Freddie Mac have low down payment options available out there, as well as options where you can put more money down. There's portfolio products. There's all sorts of stuff out there. You should work with a lender that has a variety of options. We never try to put somebody into one specific loan option. And some places, unfortunately, when they're limited with options, they try to steer you in one direction because that's all they have. Again, when somebody comes to me, and it's nothing against FHA, it's a great product, but if I can save them more money, if I can, both on a monthly basis, if I can get them a better rate, if I can put them in a program better short-term and long-term, because I consider both those things. I consider those things, and I give them their options, and I'll go over pros and cons. So I think that's really important as a client to understand that you do have options, and you do need to understand your budget. You need to know what your credit score is and what it needs to be, and the actions that you can take, and who should help you get there. So there's a lot of stuff as a client that you can do, but the goal is to make yourself a very attractive buyer. So lots of changes also going on in the jumbo world. I'm going to cover that next week. I think we're still doing a ton of jumbo business, having a lot of success there. But same thing, we're seeing some changes there. So I'm going to prepare another half hour for you guys there. But again, I think the biggest takeaway right now, guys, is as realtors, as attorneys, as loan originators, clients are really counting on us to be experts right now and really relying on our experience, because this stuff's changing at a speed in which they can't figure out. They have too much going on right now, with their families, their kids, their health. But housing is still happening. So this is our profession. This is what we work on every single day. It's important that we understand what's going on and be able to communicate it clearly to our clients. This is why I'm doing this video. I'm trying to do that kind of stuff. As always, you guys, if there's questions that pop up afterwards, please just call me, text me, email me. I'm happy to talk about this stuff as much as you guys want. If there's questions that arise from these conversations, let me know. But again, last takeaway, FHA is lending still. They have not announced any changes. All we've seen is some increases with some lenders, increased FICO score requirements, but it's not across the board, so you can still call multiple different lenders. Lower debt ratio standards, added reserve requirements, and maybe a little more scrutiny from on self-employed borrowers. But the program is alive and well. There's just some worry about default due to income loss, job loss, and it's just a business decision that's being changed and business strategy that's being changed. I personally don't think permanently. I think it's a 3 to 6 month change. Hopefully that's all it needs to be to weather this coronavirus storm. But I'm still positive that we're going to be rock and rolling, and housing is going to come out and really help stimulate this economy for the second half of the year. Rates are amazingly low. There's some really great opportunity for buyers out there. I'm even seeing first-time home buyers right now winning, which a lot of times they usually get their butt kicked in the spring. We're seeing a lot of people compete against less people right now. So there's opportunity out there for people that are staying focused on what their goals are, both short-term and long-term. Hopefully I can help those people and help you guys along the way. Thank you very much for your time today. And I hope you guys all have a great day. Thanks so much. Bye.